welcome to our first funding pathways of 2024. I'm Margot Johnson with Grid 110, an LA-based economic and community development nonprofit and startup accelerator focused on underrepresented founders. Over 8 years, we've supported 280 companies through our programs and thousands more through free events and workshops like these. I'll drop some links in the chat now. If you'd like to learn more about Grid 110, and we encourage you to sign up for our newsletter, stay up to date with events, programs, and the like. And so for this panel, we'll have Q&A at the end, but feel free to ask any questions and introduce yourselves in the chat as we go. So for this funding pathways, we're highlighting an important and, in my opinion, overlooked resource in increasing access to capital within communities, community development finance institutions, or CDFIs. CDFIs are a blend of private and public investment, and are not one size fits all. They can be credit unions, banks, loan funds, which is why we have 3 panelists today from across the CDFI ecosystem: Todd Cooley at Self-Help Credit Union, Andrea Avila from Inclusive Action, and Megan Hodapp from IBank, California. I want to start with each of these panelists introducing themselves and where their organization sits and operates within the CDFI ecosystem. So Todd, I'm going to start with you.
Hey, good morning, everybody. Nice to see you all. Grateful to be here. My name is Todd Nicholas Cooley, and I work with Self-Help Federal Credit Union. Self-Help Federal Credit Union really was started, Self-Help Credit Union was started about 40 years ago in rural North Carolina. And we began by helping workers organize to purchase the mills that they worked at. And our first sort of contribution to the credit union was from $77 from a bake sale put together by those workers. And that has sort of grown and transformed into a group of organizations, a family of organizations, if you will, under Self-Help. And we operate in a number of states in the Southeast, out here in California, up the West Coast, Washington, and into Illinois and Florida as well, and North Carolina as well. I myself am based out of Oakland, California, and I am a person who works on the executive staff here in our Oakland office, doing much around
erasable highlighters and
doing some project management around the racial wealth gap initiative that we have internally at Self-Help. So most of my projects that I work with are involved in lessening the racial wealth gap and utilizing our skills as a CDFI and as a credit union to push on that and to make things a little bit more equitable here in the United States. I feel like there's so much more I could say, and I'm going to just pause there.
Yeah, no worries. We'll get to it all. Thank you so much. And Andrea, if you want to go next, talking about inclusive action.
Yeah, hi, good morning, everyone. Happy Wednesday. Happy the rain is gone in LA. So my name is Andrea Avila. I serve as the Lending Associate Director at Inclusive Action for the city. Inclusive Action is a nonprofit CDFI based in Boyle Heights in Los Angeles, a little bit past downtown LA. You're familiar with the area. Inclusive Action began about 15 years ago as an advocacy organization. A whole bunch of folks decided to get together to figure out how can we solve the racial wealth gap. And one of the things that came out of that was advocacy around supporting street vendors in order to legalize street vending in Los Angeles. If you are ever been to LA, or if you're from LA, you probably have seen that street vending is very much a part of the culture vein of Los Angeles. And so Inclusive Action has done a lot of work around the advocacy and supporting street vendors. But after that work, the street vendors were telling us, well, this is great, but no one's going to lend to us. No one's going to give us any capital to expand or just to sustain our business. So out of that need, we created the Loan Fund. We've been lenders for about 6 years, but we became a CDFI in 2020. The last thing I would say is that we created the Loan Fund to support street vendors, and a lot of the structures that we created for the Loan Fund were based on street vendors. But when the pandemic hit, we realized that a lot of that actually, a lot of the structures that we had created were actually really good for other businesses. So for example, businesses that didn't have a credit before, businesses that didn't track their sales, all those systems what we created for one group were actually very beneficial to support other businesses. And I'll stop there and share a little bit more later.
Amazing. And then our last panelist, Megan Hodapp, which is a bit of a different organization with IBank, but nonetheless so important within the infrastructure of the CDFI ecosystem. So Megan, I'll leave it to you to introduce yourself and IBank California.
Thank you. Good morning, everyone. My name is Megan Hodapp, and I am the manager of the Small Business Finance Center at IBank. So IBank is actually a state agency. It stands for the California Infrastructure and Economic Development Bank. And as a whole, IBank has a number of different functions. We have broad statutory authority to issue tax-exempt and taxable revenue bonds, provide loans to state and local governments and nonprofits for public infrastructure and economic development projects. And then we have the Small Business Finance Center, which provides loan guarantees to help small businesses access capital. So the Small Business Loan Guarantee Program was originally created in 1968. So we've been around for a long time. And it's had a few different homes over the years. And eventually in 2013, it landed with IBank, and we've been there ever since. We provide credit enhancement in the form of loan guarantees, both traditional and disaster recovery loan guarantees, direct loans to farmers, direct loans to low wealth entrepreneurs or entrepreneurs located in low wealth communities, as well as technical assistance. Kind of the bread and butter main point of our program is the loan guarantee program, and we can provide up to an 80% guarantee on a loan made by a lender to allow the lenders to be more comfortable in making loans to small businesses. Obviously, accessing capital is a challenge for all small businesses. So we kind of serve as a buffer to allow lenders to be more comfortable in providing those loans. I think that's where I stop for now.
I appreciate the context. I didn't realize that the state of California had been doing this for so long. It's very
Yes.
And I love that for a few panelists, the racial wealth gap had been mentioned. That's kind of leading perfectly into my next question. I had watched recently a short documentary that's up for the Oscars this year, The Barber of Little Rock, that really focuses on this problem, this ever persistent racial wealth gap in the United States, and kind of the opportunity potential for CDFIs to address it. And everyone I should watch it. It's on YouTube, and it's like 30 minutes or so. It's amazing. But I kind of want to ask each of you kind of what within that lens of the racial wealth gap, the work that you're doing, how you think about it, and how you're looking to what are the programs and actions you're taking to close it. And we can start with Andrea this time.
Yeah, that's a loaded question. I feel like yeah, like the questions that Ms. Universe get when they answer. So I think inclusive action started out of that need, right? We saw it in the community that we serve. Like I mentioned, we are in Boyle Heights, which is a majority Latino neighborhood. And you can see a lot of that disparity in the neighborhood. When we created the loan fund, we realized that we couldn't just operate like any lender. And that's what CDFIs are made for. CDFIs are made to not operate like any lender. They're made to support entrepreneurs that wouldn't be able to get capital from anywhere else. So a lot of the structures that I mentioned earlier, for example, you can go to a lot of lenders that could give you cash in minutes, but their interest rates are probably 30, 40%. The highest interest rate that we have is 8%, and that's a fixed percent. It never changes throughout the life of your loan. That's one way to make sure that we have low interest rates. The other way is that we're very, very high touch. And what that means is that the moment you come into our offices or you make a phone call into our offices and ask that you're interested in a loan, you get someone assigned to you that will walk you through the process of obtaining that loan. And why is that? Because we realized that a lot of folks that came into our offices never had gotten a loan in the past. And so it became really overwhelming to go through this process and through these questions without having a full understanding of why are you asking me about my personal assets? Why are you asking me about all these things that I had never had to think about in the past? but having that one person that you can call and ask questions made it a lot more of an easy process as opposed to having to call into the 1-800 number abyss. The other thing is that we're looking at credit a little different. Yes, we are pulling your credit. Yes, we will look at your credit, but we're looking at other things. Are you paying your personal bills on time? Are you paying your utilities on time? We have been doing that for a while, and it wasn't until maybe a couple of years ago the TransUnion decided that it was a noble thing, and now they charge people to add that into their credit reports. So those are a couple of things that we're doing, and I'll stop there.
Great. And then Todd, I'll ask it to you. And I know that's probably a big question, given that's really the focus of your work with self-help. But yeah, I'd love to just kind of hear what are some of the initiatives, programs you're working on.
Yeah, no problem. And I mean, I feel like it really is sort of entrenched in a huge part of just who we are as an organization, and the work that we do. So many of the places, so as a credit union, we have branches all over California, like 22 branches or something like that. And so when I think about the question, I think about all the different people we serve through our branches and all the different people we serve through our different products and offerings that we have, from sort of commercial lending to real estate development, to sort of that individual person who walks into a branch. And so sort of an example from that, you know, most basic of units, the one person, the human being. When you become a member with Self-Help, that's a credit union, which is essentially a bank that offers all the things that you might need: savings accounts, checking accounts, personal loans, those types of things. When you become a member, you also then gain access to a host of financial education resources and coaching. We have things such as like our credit builder loan, which helps folks essentially, in a way, create a savings account that is then reported to the 3 different credit bureaus so that you can build your credit. So from that sort of singular unit where we're helping folks become more financially stable, more economically secured, all the way to say home ownership within that individual context, and offering and creating products that allow for people who have not traditionally had access to home ownership to allow that to be more accessible. For first-generation home buyers, for all different types of people in different situations, to lower those barriers to home ownership, to create wealth in the communities. And then when you sort of go to the next level of things, when you're looking at organizations, we really try to, I would say one of our philosophies is really an approach to how we do things is that we work in partnerships with organizations and really see folks where they are at and understand what they need at any given point of their project or process. So in terms of narrowing the racial wealth gap, that can look like on the small business side of things, you know, well, I don't want to go too much into the next questions and jump into things with Andrea, but essentially, really looking at ways to build economic opportunity and wealth for whatever individual or organization that is, and taking it within the context of the systems that we know exist and the institutional racism, the institutional discrimination that has sort of happened over the course of time with government policies to create the situations that we're in, and to look at those contexts and really begin to break them down so that we can build back up within those specific places in a more equitable way.
Yeah, no, and I appreciate that both you kind of lead first with the community aspect of kind of from the ground up of that person-to-person connection. I think the financial system is so opaque and confusing, and that's kind of where it starts. And from the institutional perspective, I'd love to hear, Megan, kind of how from the state perspective, kind of how IBank is thinking about the racial wealth gap and some of those initiatives.
So this is an interesting question for us. Obviously, being a government organization, we are not able to target certain demographics, either direction, good or bad. We have eligibility standards for our program, and if people meet those eligibility standards, meaning like the use of purpose for the loan, et cetera, it's eligible. We aren't looking at demographics, anything like that. However, the way that we have gotten around it, because I mean, like I said, our program's been around since 1968. Historically, most of the recipients of the loans that we were guaranteeing were white men. And I think that we've come a long way since 1968. So now we look at our partnerships. We have been working heavily with CDFIs, who are mission-based organizations and do a lot of work in the communities that they serve, to ensure that our numbers are a whole lot better than just going to white men. And we've been successful in that. We partner with CDFIs. We also work with a lot of chambers and kind of target our outreach to ensure that we are getting the word out about our program to a lot of different community partners who, like I said, work within the communities that they serve and can bring awareness to the programs available. And so I think that that is how we are tackling it. We had a COVID-19 microloan initiative that we provided guarantees on loans to help businesses recover from COVID-19. And in that program, 87% of the guarantees went to businesses that were either minority, women, or LMI owned businesses. So that was a huge success than what we historically were doing.
Amazing. Yeah. Oh, sorry. But it kind of leads into my next question, kind of around what I get most excited about CDFIs is this idea of this policy and legislative aspect, especially around partnerships. I think CDFIs more than any other, or definitely more than any other financial organization, and maybe because they're also very mission driven, tend to rely on partnerships to kind of push legislation, whether on the state or federal level. So I'll start running back with Megan first, and kind of on what are some of the policies or kind of legislative pushes you're seeing that you're excited about, especially around kind of empowering small businesses, increasing access to capital. Kind of what are you seeing on that side that is promising and exciting for you?
I don't know that I've seen a whole lot of legislative pushes. The one thing that I can speak to is we recently received an allocation from US Treasury for the State Small Business Credit Initiative. And California as a whole is getting about $1.2 billion to continue facilitating these credit enhancement programs. There is both the programs at IBank, and then the state treasurer's office houses a couple of programs that help businesses access capital. And within that program, so SSBCI, the State Small Business Credit Initiative, there is a carve-out incentive for SETI-owned businesses, which is socially and economically disadvantaged individuals. And each state essentially has a target to meet, a goal to meet of SETI-owned businesses that they are helping in order to get that pot of money from US Treasury. So it kind of serves as an additional incentive to make sure that we are actually reaching out to underserved businesses and helping them access the capital.
Very cool. That's great. That's great. It's always good to hear. I think California can be such a leader in some of these things, and that's exciting. And Andrea, I know inclusive action, but legacy is really advocacy. So I want to ask you kind of what are something you're seeing either, within other organizations, or again on the legislative side, that's exciting to you, or something inclusive action yourselves are working on, kind of more on the policy side, whether on the city level in LA or across the state.
Yeah, I think I'll mention three. The first one is that the CDFI fund is a federal designated fund. The state of California decided that they wanted to create their own CDFI in order to fund CDFIs within the state. So that's very new. I think California might be the only state that has that. The governor might have slashed the funding last year because we had a deficit, but just the mere fact that there is a California version of a CDFI in order to provide more funding to organizations like ours is very important. The other one is the recertification in order to become a CDFI. So CDFIs had they have a lot of rules and they have to follow a process every year in order to become recertified. And part of that is to make sure that you are serving community. A lot of CDFIs were kind of getting away with that, and you had CDFIs that maybe were charging 36% interest rates on loans that were considered CDFIs. I think a lot of folks, for example, self-help had a lot to do with this and trying to push the government to say, you need to really look into who you're giving this designation to. You can't just be giving it out like candy. And the government really took it, the Treasury really took it very seriously. And the new certification process is a lot more, it has a lot more emphasis in really making sure the CDFIs are doing what they're supposed to do. We do a lot of work with different coalitions. So I'll mention Todd and then I'll pass it on to you. We work a lot with self-help with different CDFIs and lenders across the state to really develop a racial equity lens on underwriting and how can we create products that really look into other ways to underwrite to really push out more capital into the hands of business owners.
Yeah, and then Todd, yeah, if you want to expand upon that too, the kind of similar question, and yeah, whether like partnerships or advocacy work that you're excited about.
Yeah, absolutely. So I think, you know, on top of the sort of the governmental and the legislative ways that we can affect change through policy advocacy, there's also ways that we can affect change just through the internal policies and culture of financial organizations and institutions, and through the ways that we look at lending. And so to jump off of what Andrea was talking about, we are a part of a larger coalition in California called the California Small Business Coalition for Racial Justice. Is a mouthful, but it's about 21 organizations, many of them CDFIs, many of them technical assistance providers who, you know, provide help to small businesses in obtaining funding, getting their businesses running well, and also policy advocacy organizations. And within that, we have really tried to look at underwriting, as Andrea mentioned, and look at the sort of foundational inequities and sort of discriminatory ideas and philosophies of those underwriting principles, and really sort of like blow them up and create some that are more equitable and that are more accessible for our Black and brown and people of color communities, rural communities, folks that have been traditionally kept out of financial opportunity. And so within that, we've created a pilot program to try to build the case to say that, hey, look, like if we look at underwriting differently and we open up that space and we look at risk differently within underwriting, then we can build a case to sort of push that further, sort of like up the chain to the more traditional financial institutions. Because the CDFIs, many of us, you know, we are, you know, we're looking within populations that haven't been served, but a lot of these bigger banks that serve so many people don't necessarily do that in the same ways. And so if we can sort of build a case to say, hey, look, folks of color will pay back their loans. Folks of color are deserving of capital. Folks of color have been doing it for a very long time within their communities, helping each other and helping themselves to raise capital in different ways, you know, that we can create an environment that other organizations pick that up and say, hey, let's look at how we do this differently, and let's change how we're looking at underwriting and how we're deciding who's worthy of credit and who's worthy of capital. So that's sort of one other way, aside from the legislative ways, that we can push and make change at a broader pace.
Yeah, and that's a great tie-in kind of to the next question about, you know, we're growing town, we're a community of founders and small business owners, and those who increasingly we keep getting this question of basically how to access funding. And I think there's a lot of fatigue around the VC funding model, and a lot more interest in how you can access more patient capital that will really allow businesses to grow. So kind of on that underwriting question, I know self-help maybe is not necessarily so involved in entrepreneurs and small businesses, but Todd, if you could kind of speak on kind of more diving a bit more into how founders should think about small business loans, especially from CDFIs, kind of what are the best use cases for them, how they should consider them and sources of capital.
Yeah, absolutely. So I think what sort of comes to my mind immediately when I think of CDFIs is I think of organizations that are a little bit more tapped into their communities, a little bit more understanding of the different ways that we do things and ways that we are, and whether that's the ways we run our businesses or run our homes, deal with our personal financial situations. CDFIs, I would say on the whole, tend to be more understanding and tapped into that and can fill a space of funding and opportunity to obtain capital that maybe some larger banks don't have. So when you are a small business, like you have, a very wide range of where you're at. Maybe you have an idea, maybe you have a prototype, maybe you've sold, 50 units of your creation, or maybe you have been running at a profit for 2 years and you need to expand your operation and get capital for that. And I think CDFIs can offer financing and capital in that space that goes from that friends and family level funding, say it could be $2,000, $5,000 to $25,000. Those sort of what some people will call micro loans of under $50,000. And that gap between, the small business lending and then real commercial lending, and which for us, and as an example, sort of begins at $500,000 and goes up. Whereas so many of our partners and us, to be upfront, we don't actually offer small business lending in the state of California at this moment. We do in other states, but we have plenty of partners in the state that offer small business lending. But I would think to look at that space, sort of between, $5,000 and $500,000 and everywhere in between, as CDFIs really being an opportunity to engage and, not only gain access to capital, but really gain a partner who cares about your business and wants to help your business grow and really be the best that it can be for you and your community, and not to necessarily just make a buck off of it. You know what I mean?
Yeah, and I think, Andrea, you work with Inclusive Action really fills that gap. I know Inclusive Action offers those microloans for small business owners, who need that low interest capital to grow or kind of get them through some dry periods. So I don't know if you want to talk through that, some of the how you all have approached your loan offerings and kind of how you've seen businesses use them and where they're most successful.
Yeah, like I mentioned, the way we try to do lending, it's very high touch. So I mentioned you get someone that works with you through the application process. Once it goes into underwriting, it's the same way. The underwriter is in constant communication with the business owner to think through different scenarios of the funding, offer different alternatives. I would say CDFIs are a great great place to start as a business owner if you have never gotten capital from anywhere else. And if you're a little afraid of the financial system, because the financial system, I work in the financial system and I still don't fully understand the financial system. It's just complicated. And CDFIs are that one place, like Todd mentioned, that are in the community, that know the landscape, that can help you walk you through the process so that it doesn't feel so overwhelming. That's what we try to do. We offer different loans. We have one right now that is 5% and is specifically for technology. I'm sorry, it's 3% interest rate and is only for technology equipment and inventory. And we have seen folks use it to expand their businesses. We have a ice cream business owner. She used to sell ice cream at Smorgasbord every Sunday, and she just got so big that she couldn't continue to just do it manually. So we gave her a loan to buy the equipment to actually use the equipment to produce the ice cream. And now she has her ice cream in a bunch of different stores in the Highland Park and Eagle Rock area. We have a guy that sells chicharrones, like the pork rinds. He was also just using it manually. We also give him a loan and a grant in order to expand his business so that he can produce more chicharrones. And I think he sells them at Seafood City, which is like a pretty big store. So it could be that you are in that expansion phase, or it could be that you're just starting. We have also various more loans, like maybe you just need $500 to get you started and see if that idea that you have takes up, right? We have that. We also have loans that are up to 50K. We are a micro lender, so our highest loan is 50K. But maybe that's all you need in order to get you to that next phase of the business.
Amazing. And Megan, I know that's not necessarily what IBank does, but I'll open it up if you have anything to add to that, or your own opinion.
I don't have a lot to add. I will say that I think I agree that CDFIs are a great place for the initial capital for businesses. We see a lot of situations where a borrower will get a $5,000 loan and they will be paying that off and decide they need more money, and they're able to go back to that same CDFI and then get a $25,000 loan because their business has grown, and that is eligible within the program. It's not a program where you get one guarantee and you're done and you can never get another guarantee again. So we're able to work with the CDFIs to allow these businesses to grow through the process. That's all.
Yeah. No, more of the institutional higher level. For my next question, I know we've been touching on it very much, how CDFIs are so community based, but I kind of want to open up a question, really like a plug for some of your capacity support programs. Both self-help and inclusive action have really robust programs in terms of coaching small business owners and entrepreneurs, and so I just want to kind of highlight more some of your all capacity work. So we can start with Andrea, kind of in addition to just the financial lending, kind of what are some of the other programs and support that inclusive action offers?
Yeah, so anyone that gets a loan with us gets assigned a technical assistance provider, just a business coach pretty much, that will be with them through the life of the loan. And they can meet with them as many times as they want to. The business coaches offer support on different areas. It could be marketing, it could be how to file your business taxes, it could be just how to figure out your social media platform, the cost and benefit of social media. We have seen a lot of business owners that are really excited to spend a bunch of money on Facebook ads or Instagram ads, and then we do a little bit of an analysis to really see if it is cost effective, and we realize that it might be some other ways that we can start on a free basis and then move into a more structure social media posting. So it's different things like that. We actually have at the moment in our offices, we have VITA services. So it's free tax preparation every Monday and Saturday for individuals. Business owners can also get free tax preparation as long as they are a sole proprietor or a one-member LLC. And there is an income limit that is set by the IRS. But we try to support businesses not just on their business, but we understand that a business owner is a person. And that might mean that you have other things that you need to take care of before you take care of your business. So we have found different programs that if you maybe are behind on your personal rent, or you're behind on your electricity or utilities, how can we support you in those areas so that you can then go ahead and take care of your business? Because at the end of the day, it's the same, right? You cannot go and take care of a business unless your personal needs are being met. So we try to look at everything holistically.
That's amazing. Yeah, that's a lot of what we found our founders need, is that holistic support. It's not just capital, it is a lot of the infrastructure around it and a lot of around business coaches, but even your personal aspects. And good reminder to work on your taxes. That's something that's on my to-do list this week. And Todd, kind of also for you, I know self-help has a lot of capacity support across your many locations, but you have to touch on some of the support you provide to your borrowers. Oh, you're mute.
All right, sorry about that. Still learning 4 years later. Whatever this is. So I would say that, you know, as I mentioned, we don't have that small business lending, but for any sort of work that we do with people, and I would say we can talk about commercial lending and real estate development that we do as well, where we work with small businesses and nonprofit organizations that are mission aligned, is that our approach is really to, you know, understand where folks are at in their process, like I mentioned before, and really provide the support to them to get them to whatever next step of their process they need to be in. And so, you know, and really walking sort of hand in hand with them through the development of their proposal, their continued operations of their businesses, being, you know, sort of consultants to them, and dealing in that sort of high touch way, as Andrea mentioned. And I would say that even on the real estate development side, we have organizations that come to us with an idea, and not sure where exactly to land that idea in terms of obtaining the capital or even developing whatever that might be. And we really like to work with folks to be able to help people move forward and through into the next correct direction. But if you are looking for certain specific types of support for your small business, you can reach out to me after, and I can connect you with organizations that I know of, that we work with in the Coalition for Racial Justice, that provide a lot of that technical support as well across the state.
Right. No, thank you. That's robust. And Megan, I know you mentioned technical assistance, and again, you know, I know IBank is much more on the institutional level, but want to open it up. Any programs that you all offer, or those you've heard of from the state to provide capacity support for business owners?
There's a variety of technical assistance support options available at both the state and federal level. The Small Business Administration, SBA, funds the Small Business Development Center networks throughout the country, and that is a really good resource for SBDC networks for free coaching for basically anything, whether you have an idea and you need to make a business plan, or you're trying to prepare to get capital. Kind of runs the gamut on what they can provide as far as technical assistance. There's also a number of other technical assistance providers that aren't actual SBDCs. There's women's business centers, there is the SCORE network, and then within the state, the California Office of the Small Business Advocate, or OSBA, also provides funding to technical assistance centers throughout the state of California. So there's a lot of access to TA out there.
Yeah, I will second that. I feel like almost in California, it's overwhelming, the number of agencies that offer small business support. And I'll plug our newsletter. We're always trying to highlight free capacity support for small business owners, founders.
I feel like it's overwhelming, and I feel like it's unknown too. I find so many business owners have never heard of any of these things. They had no idea. Using my dad as an example, it was 25, 30 years ago, but he started a business and had no idea that he could get technical assistance. And it's a great resource for people.
Yeah, no, I really second that. And I wish we're working on trying to better compile some of these resources, because they are, you know, I agree, I think they're underutilized. And anyone in California, there's a lot of free support out there.
Yeah.
So,
Margaret, if I can add to what Megan said, the SBDCs are super important. They do a lot of work in helping, for example, they help you package your loan. So if they already know you need a loan, they help you gather all the documents, make sure that you have everything, and then package the loan and then refer you out to different CDFIs or lenders. So they do a lot of that work for you, and it's completely free. Which it's the biggest, most important thing, that is completely free.
And they're all really knowledgeable about the variety of credit enhancement programs that are available to help businesses, whether that's through SBA, through the state programs, or whatever. And they know which lenders work within those programs, and how to refer you to those lenders.
Amazing. Well, thank you all. And we're coming at the end of the panel. So I think we're going to end it with just, if people are interested in learning more about your organization or about your loan products, how best they can reach out, get in contact. So we'll start off with Todd and then go to Andrea and then Megan.
Well, at the risk of the bots capturing my words, I'm gonna put my email out there in case y'all want to hit me up. It's just Todd C, TODDC, at self-help.org. Feel free to shoot me an email. Happy to chat with you and do whatever I can to help you out.
Andrea, same question.
Yeah, I can also give you all my email. It's andrea@inclusiveaction.org. And if I don't have the answer, I'll send it to someone else in the team or some of the contacts that we have.
Great. And Megan, no pressure to provide your personal email.
I'm actually going to provide our general email. You can get to me through there if you need to. I don't always have the capacity to respond to all of the inquiries that come in, but I have a wonderful team under me that does. So I'll put that in. It's a little weird to say out loud, so I'll put it in the chat so everyone can see it. And if you need to talk to me directly, just flag that in the email and my team will send it to me.
Amazing. We'll open it up to Q&A. I think the best would be people just to raise your hands and then ask your question, but you can start it off with a question that was in the chat, which kind of actually Veronica already answered, but we'll just start. Actually, seems to be answered for business acquisition. So we'll start actually with Luke. Okay, hand raise.
Hey all, thanks so much. This is a really great workshop. I have a question more on the underwriting and the credit side. When it comes to, like you mentioned, evaluating utilities and other bills to determine creditworthiness, do you do that by checking a different FICO score or do you collect that separately? I'm also curious if you have any thoughts on what it would take for banks to use, because my understanding is even if they report that to credit, it may or may not show up depending on what version of the score that they check. So any ideas on what it would take for that to be implemented more widely? And then the other question is, are there any restrictions that are placed on CDFIs when it comes to credit reporting? Do you guys have like entirely just carte blanche if somebody's communicating well to not report any negative info, or are there restrictions placed on y'all when it comes to that? Thank you.
Okay,
Todd?
so yeah, I can answer so the underwriting piece, we ask applicants to submit a copy of their bills, because you're right, the whole concept of, I forgot if it's TransUnion or Experian that has that service where they charge you a little bit more every month and then you can report your utilities. It doesn't always come up. There's like 9 different FICO scores, and it doesn't mean that every lender is using the same. A lot of people, when they come to us, they say, hey, I have a 720 in Credit Karma, but when we pull it, it's like a 640. Why the big discrepancy? And it's because the credit score that you get in Credit Karma, it's not the same that you get on like your Bank of America, because it's the one that Bank of America is using based on the products that you're using for them. I would say the easiest way to get the real credit score that you have is through the free credit score website that you get. You get 1 credit score pull per year. They used to have it, you could pull it every month during the pandemic. I don't know if they got rid of that now. But yeah, at least you get 1
It's
per
still
year.
there. Yeah.
Okay, perfect. In terms of the banks doing that, they're trying, but I think the issue is that banks are more, they really care about risk, right? And so the reason why they use credit score is because they use it as a way to look at whether someone that is applying for a loan is too risky or not. They're trying to do different programs. Some are more risk averse than others. I don't know that they will fully embrace that. I mean, ideally, CDFIs are trying to work ourselves out of a job so that banks can actually do this, but I don't know that they would ever do it.
Yeah, thank you.
Do you have anything to add or?
Yeah, I can jump in there a little bit. I wish I had an exact answer, but I do know that for certain of our loans that we do, we are required to report to the credit bureaus, and we have it set up as such. And so we do adhere to sort of the financial regulations of the credit unions. However, there are a number of organizations that are out there, some of which might have CDFI status and some of which might not, but are also loan funds that are really trying to work to break down the barriers that are there in underwriting. And for instance, one of our partners, the Runway Project, which is here in California and also starting out to be out in Chicago. And they're really focused on helping Black and Brown women-led organizations. They've started a new fund where they will be doing lending for small businesses. Like I think initially what we worked with them on was up to $20,000 loans. But they are really working to get out of the system of credit reporting at all and be an even more community-centric, relational-based lending model. And so there are folks out there that are looking at things like even more radically than some organizations. I'd say even in the scale of CDFIs, there is a spectrum of how much folks are pushing things or how aware they are, or how much they're really trying to sort of break down the norms that have created problems for so many folks and so many people over the years. So I would say that there are places out there that don't require reporting as well. But it also can be of service to people to report to help build their credit so that they can have opportunities in the future down the line when they might want to get capital or, just do anything in this capitalist system that requires that fun piece of it. Right.
Yeah. Thank you so much.
Margot, I will add really quickly because I forgot Luke, you had the second part of your question. Majority of CDFIs actually personally guarantee loans. And what that means is that the loan goes into your personal credit score, not on your business credit score. There is various reasons for that. Majority of the folks that come to us don't even have a business score, so we have to put it on their personal anyway. But when it is on your personal credit score, there is a line on the loan that it says business loan.
Cool. Thank you both. Yeah, I never heard of Runway Project. That's awesome. Next question, Zen, if you want to unmute yourself.
Yes, hi. Can you guys hear me?
Yep.
Okay. So speaking of the loan, I know it's on your personal credit as a guarantor and it says business, but does it help the business credit or help you establish business credit? And do you guys have any business credit programs within getting a business from where they add to scalability? Yeah, if somebody could answer that before I continue.
I guess Andrea, do you want to take that first, I guess, or?
Yeah, so I think ideally should help you, Bill, but it's not because we're not reporting it to the business credit. But because it is a trade line, then you can show both. Like you already had a business loan and you paid it off. And now you have your business credit. And then what was your second question? Sorry, maybe someone else can answer.
So basically you answered it because I'm like, if I'm the guarantor, do you guys report to the business credit? Do you have any other programs within CDFI that helps with business credit?
We don't. I don't know if Todd does. We don't. But in order for you to get to establish your business credit, you have to get a DUNS number. There's a couple of steps that you have to do in order to get. So we help you do that. But we wouldn't report it to the business credit.
Okay, got it, got it. Okay, and my other question, well, I know you guys work with different entrepreneurs at different levels. What if it's in a level that you utilize a lot of your personal finances? Of course, we invest in ourselves, but utilize your personal finances and waited too long to seek additional capital. That you are in a point like, okay, my taxes is this every month, that your expenses within your personal and also your business got to a point that I don't have enough cash on hand, and I waited too long to seek finances for my business. And basically I'm looking for a strategy to get from all my personal income that actually help my business. I've been in business for 10 years, so I was using a lot of my personal credit cards, of course, personal line of credit. And then it's like, okay, I'm waiting too long to seek for funding. And I know you say you work at every, level of like, what's, the strategy and stuff, but have you come across like any clients like that? Like, I maxed out, everything towards my business, but my business is cash flowing and also profitable, whatever. Right.
Todd, do you want to take it?
I feel like you're gonna do better at answering this. I do. It's very common it's very, very common.
Okay.
And so don't, that's what happens. We're trying to make businesses, we're trying to make it, we have most people, it's like, you don't even know when we're starting. And I operated a small business. I speak from this, perspective is like, you just do what you got to do. You know what I mean? And I think CDFIs understand that. And so I know a lot of our partners, and I'm sure Andrea can speak to it, is that's part of what CDFIs can do for your technical assistance, is help you pull those things apart so that you can really start to establish yourself and your business as separate entities, which you will need to do as you grow and move. But Andrea, please.
Okay.
What Todd said. But yes, it happens all the time. We see it all the time. And by that, I even mean folks that don't even have a business bank account and they just use their personal bank account for everything. And then you just see them soup of expenses and income and it's everything all over the place. So it happens all the time.
And then sorry. Not necessarily saying everything is in one, of course, separated business, income, whatever, but you put in the investment within your business. But I understand you guys get clients like that saying, okay, I have this credit card, but I've been buying inventory off of my credit card instead of the business. Okay. So I won't feel like, okay.
No.
I think too.
No. I think that the first thing we do though, for example, is if you have a high if your credit cards have a high amount that you owe, we would rather that you use the loan to pay that off. Because the interest rates of that are 20-30%, while our interest rates is 8%. So we might, like, one of the conditions for a loan is like, hey, we're gonna give you the loan, but you have to use it to pay this off.
Okay, and that was my last question. You did answer that. Basically putting your debts into like one loan payment because interest rate wise, and then okay, thank you so much.
Thank you, San. There's a question in the chat. Do CDFIs provide revenue-based financing? I don't know if Todd or Andrea, if either of your organizations offer revenue-based financing.
We don't, but I actually just met with someone that offers the products to do the underwriting for that. And apparently there are CDFIs that do that. So revenue-based financing, it just means they take about 12 months, approximate 12 months of bank statements, and they just do a calculation of the revenue that you're getting from the business, and they base the loan out of that. They also base the payment out of that information. But that also means that they have unlimited access to your bank account, and they can look at your bank statements whenever they need to in order to figure out the payment that best fits you. We don't do that because a lot of our borrowers, like I said, have commingled expenses, might not even have a bank account. So it's not a good fit for borrowers, but there are CDFIs that do that.
Great.
And if you need to know which ones, I can ask the person I talked to yesterday.
Maybe that might be who's in the chat. Whoever will put that in the chat, speak up. Otherwise, one question I want to get to before we close, that a panelist, that an audience person asked me is advice for companies who are pre-revenue and pre-profit, that they keep hearing you need to have a profit to get loans. How can they create a stronger application when they are pre-revenue, pre-profit? So I think that's the last question to end on. I don't know, Todd, we can start with you, and then Andrea on that, or either, or whoever wants to take that.
I am so sorry. I was responding to somebody in the chat.
Oh, that's okay. We'll start.
My bad.
Andrea, if you were, that's okay. There's a lot. The chat gets overwhelming. Andrea, I don't know if you'd heard me, but basically, for a business owner who's pre-revenue, pre-profit, how they can create a stronger application to receive a loan.
Okay, so that means that you're probably a startup. So first you need to find the CDFI that funds startups. We fund startups, but only from 500 to 2,500. This is a very small loan. I would also really think about if you really haven't had any revenue. We had businesses in the past that when we ask about revenue, they say, I don't have any revenue, but then we keep digging a little bit more. And then they say, oh yeah, I've been selling cakes to my families and friends for like a year now, but I don't really count it as revenue because it's only my family and friends. And we're like, yeah, that is revenue because you've been charging them. It's revenue. So just really considering what you're counting as revenue, because you might already be getting some revenue, but you haven't really conceptualized it that way.
Yeah, so being creative. I like that. Todd, any words on that?
I would say I'm not exactly sure, but I know that there's people who I know who could tell you more, and I'm happy to refer y'all to them. Sorry about that.
Yeah, no, I think that is a common problem that we often hear too, and I really like Andrea's response, is that I think kind of be creative, and I think there's more often than not, there is some kinds of revenue that maybe just is not as traditional. But
I would, Mario, sorry, one last thing. I think because they asked about making their application, how to make themselves a better applicant. I would say two things. One, be very conscious of how much you actually need of a loan. So just because someone is offering you 50K, do you really need 50K? What are you going to use it for? Can you actually pay it? I mean, CDFIs, everyone in the business is great, but it is debt at the end of the day. And we do have to make sure that you can pay that debt back. And the second thing is to be really honest with whoever you're filling out the application, because at the end of the day, when we pull your credit, there's other places that we can pull information, and we will eventually find out. Some CDFIs, we don't do this, but some CDFIs, as soon as they find out that you lied on an application, they automatically disqualify you. So just be honest. We're not here to judge. We're here to support.
thank you. That was a great, I think, ending note. And thank you to our panelists. We will be sending out this recording, so you can, if you missed out on the contact information, you can see it on the recap email. And thank you, Todd, Andrea, and Megan. This was wonderful. Really appreciate it. And have a good rest of your day, everyone.
Thank you.
Bye.